Despite a brief spike to $24,498 on January 29, Bitcoin was unable to reclaim new support levels above $23,400. Resistance was stacked at $23,200, $24,500 and $25,000, with the latter still on traders' radar. Analysts remained cautiously optimistic. Some were expecting a retest of resistance above the $1 trillion mark, and BTC USD looking set to close the week at its highest level since mid-August. January gains stood at 39.8%, Bitcoin's most profitable January since 2013. The upcoming week will see potential macroeconomic triggers from the U.S. Federal Reserve as they decide on their latest interest rate hike. This article provides an overview of the current Bitcoin market as investors await the weekly and monthly closes. It highlights the need for bulls to have the firepower to neutralize bears, with resistance levels at $23,200, $24,500 and $25,000. It also mentions the potential for Bitcoin and altcoins to reach new macro lows in 2023 and the potential for a fresh macroeconomic trigger from the Federal Reserve in the upcoming week. A&T Capital's Web3 Trends 2023 report explores the potential of Web 3.0 technology. This includes blockchain scalability solutions, application-specific blockchains, wallets, and exchanges. It reveals that the primary market investment AUM for Web 3.0 has surpassed $50 billion. The NFT market has grown to over $20 billion, with more than 3 million holders. These solutions will be widely available by 2023 and will coexist to meet diverse needs. It also highlights the importance of proper risk management, transparency, and regulatory compliance. Additionally, it emphasizes the potential of MEV and hybrid exchanges. A&T Capital aims to invest, build, and empower the Web 3.0 ecosystem in 2023. A&T Capital's Web3 Trends 2023 report provides a comprehensive view of the Web 3.0 ecosystem, delving into the key trends that will shape the future of the digital landscape. With the rise of DeFi, Web 3.0 protocols, and NFTs, it is clear that the opportunities in the space are growing and the potential for value capture is immense. This report provides a valuable insight into the key players and technologies in the Web 3.0 space and the implications for the future of the digital economy. John Deaton, founder of Crypto Law, believes that the White House's statement on mitigating risks associated with cryptocurrencies is likely to trigger the most aggressive push yet. To shut down crypto is the goal. The SEC has been increasing its clampdown on the market under the leadership of Gary Gensler. Ripple is currently involved in a legal battle with the SEC over the alleged unregistered security offering of XRP. Stu Alderete, Ripple's general counsel, believes a favorable ruling in Ripple's SEC lawsuit will be the catalyst needed. It will push the U.S. crypto industry forward. The White House's statement shows that the administration is taking steps to mitigate the risks associated with cryptocurrency, and to ensure the industry can move forward in a safe and responsible manner. It remains to be seen how the SEC's increased scrutiny and the potential court ruling in the Ripple case will shape the future of the U.S. crypto market. The Biden administration has warned that it would be a grave mistake to allow ties between cryptocurrencies and the broader financial system to deepen. This is due to the potential for a global financial meltdown. Following a devastating collapse in the crypto market in 2022, where the price of Bitcoin crashed from almost $70,000 to around $23,000, Congress has been urged to step up their efforts. Regulation of the cryptocurrency market is now a priority. Wall Street giants have begun making inroads into the crypto world, with partnerships and investments being made. The administration has called for legislation to ensure appropriate guardrails and transparency for those participating in the digital assets space. However, the industry has been warned against heavy-handed or rushed legislation. The crypto industry is still reeling from the collapse of FTX and its fallout. It is feared that this could put off traditional financial players from adopting the technology. This statement from the Biden administration is a clear indication of the importance of regulation in the cryptocurrency market. The officials are urging Congress to take action in order to ensure that the ties between cryptocurrencies and the broader financial system are not allowed to deepen, as a result of the global financial meltdown that is being warned of. The statement has been widely welcomed by the crypto industry, as it provides a platform for further discussion and evidence-based policymaking. It is important to ensure that the legislation is formulated correctly, in order to provide the appropriate guardrails and transparency for those participating in the digital assets space. Nansen's blockchain analytics platform revealed that Coinbase and Binance accounted for 55% of Ethereum exchange holdings. 8.72 million ETH was held on Coinbase and 4.94 million ETH was held on Binance. Kraken, Bitfinex and OKX held 1.97 million, 1.82 million and 1.25 million ETH respectively. In Q4 of 2022, the number of over 1 ETH addresses increased by 10.4% due to optimism surrounding Ethereum's merge and Shanghai upgrade. The Shanghai upgrade is expected to take place around March and will allow stakeholders to withdraw their ETH and rewards. This analysis from Nansen provides an interesting insight into the distribution of Ethereum exchange holdings. It shows that Coinbase and Binance are the two exchanges with the largest percentage of Ethereum holdings, at 35% and 20% respectively. It also provides useful data on the number of Ethereum addresses holding more than 1 ETH, which has been steadily increasing. The anticipation for Ethereum's Shanghai upgrade and its successful merge in September are likely to have contributed to the increase in ETH holdings. Exploiters behind the Harmony Bridge attack have continued to launder the funds stolen from the platform in June 2022. On-chain data revealed by blockchain sleuth ZachXBT showed that an additional $27.18 million in Ethereum was moved over the weekend. Part of the stolen assets have been frozen after exchanges were notified of the funds transfer. The FBI have confirmed that the Lazarus Group and APT38 are responsible for the theft. They stole $100 million in virtual currency from Harmony's Horizon Bridge. This is not the first major breach Lazarus has been implicated in. The group was also responsible for the $600 million Ronin Bridge hack last March. This is another example of the North Korean exploiters' continuous attempts to launder the funds stolen from the Harmony Bridge attack. The tokens were moved to 6 different crypto exchanges, and exchanges were notified about the transfer. The FBI has identified Lazarus Group and APT38 as the criminals behind the $100 million hack. This follows the $600 million Ronin Bridge hack last March, which was also linked to Lazarus.